I am delighted to introduce our next session of the day, titled Balancing Act, the Opportunity Set versus Macroeconomic Pressures, and moderated by Kabir Narang, founding general partner at B Capital Group. Kabir, over to you.
It's great to be here on this panel on the Balancing Act, opportunity set versus macroeconomic pressures. And I've got a great panel that covers different geos in Asia. We've got Gabriel helping share his perspective from China, Sandeep, Murthy, who can share that decades of experience investing in India, and Hian to talk about Southeast Asia. At some level, we're in a very interesting backdrop. If you think about it, just the monetary and fiscal stimulus, cumulatively about 30 trillion, it's just unprecedented. And in that context, it's almost a new learning for investors across the world on how to kind of navigate through that cycle. So, one of the most important things of how do you navigate through that cycle, let me start to pull in our speakers. Gabriel, maybe starting with you. What is your view? What's the view at Orchid Asia as you think about just navigating through the cycle and where we are in the cycle?
Sure, thank you. So it's great being here today to share a little bit about our views with every one of you. As you may all know, China is actually after a very strong bounce back, from COVID last year, this year in the third quarter, the economic situation started to slow a little bit because of the resurgence of Delta virus in China across 20 cities in August. I think September now it's a little bit better, but again, we're managing through this wave of a little bit of a slowdown, which I think will continue actually to the rest of the year, because last year was actually a very, very strong year in terms of the second half bounce back. So for us, investing in China, I think the key thing is not really reliant on the economic cycle. It's more reliant on, the value we can deliver to our earlier stage, growth stage investments, and what we can do to help them to grow, despite all the macroeconomic issues, whether it's positive or negative. So I think that is the key aspect that I like to emphasize, in terms of what we do and how we're navigating through these different cycles.
Sandeep, pulling you in, last year we saw in India, of course, having its impact from a GDP standpoint, slowdown. And now when you look at things from an investing standpoint and look at some of the data, just a quantum of investing, it's probably an all-time high. You're starting to see some exits. What is the view that you're taking, that Lightbox is taking, especially in the India context?
Yeah, I think the stimulus hasn't necessarily affected consumer behavior, because I don't think that that's actually played out at that level here in India. I think actually what you're seeing is stimulus in other markets has probably allowed for valuations on a comparable basis to move up, because all the comps in other countries are up. And therefore, as a result, the companies in India have actually accelerated their growth or achieved what I think was the earlier promise for nearly a decade and a half of what was about to come, just due to sheer necessity. The fact that you couldn't leave home, the fact that you couldn't go to shops, all this forced changes of behavior that I think have now allowed the economics of these businesses to start to look attractive, and therefore we're finally starting to see that play out. So it's less been direct consumer stimulus in India, it's more been actual change of behavior that's been driven by just necessity. And I think that's going to now result in changed behavior going forward. And I think that that's going to bring about a lot of liquidity that we've already started to see with Zomato's IPO, with a bunch that have filed and a bunch that you'll continue to see file. And quite honestly, it's been too late in the coming. It's taken a long time for us to get there. And I think it's finally, it's achieving its due course. And I'm hopeful that these stories will provide for greater confidence for people to continue to come into the market. And I think you'll actually see metrics that are going to look very attractive going forward.
And Hian, we've obviously tracking Southeast Asia from a quantum of PE/VC investment, hitting the 10 billion mark, again, an all-time high. But you're also seeing countries starting to kind of behave differently. We look at Indonesia, it had a bit of its back to the wall with the commodity cycle cooling off, need for reform, but you're now seeing with commodity prices coming back in strong rebound. So how are you seeing a bit of some of the markets, especially Indonesia, Vietnam, and both the opportunities and risks from your perspective?
Absolutely. So for us in Southeast Asia, and of course, Openspace, we only invest in Southeast Asia from a macroeconomic perspective. Where we are now in the cycle is very unique, right? Why I say unique is because the Fed is currently thinking of tapering and getting worried about inflation, all these kind of things. Southeast Asia, by and large, if we have to generalize, the economies are relatively closed because everyone's fighting the COVID. To give a perspective, last year GDP was down 4.2%. And certain places were affected even worse. Philippines was down 8%. Indonesia was actually down only about 3%. So I think we're going to have a slingshot effect if in about 12 to 24 months we revert back to normal. Not only were we going to see the usual sort of amount of GDP growth, but we'll have to tap on, say, the other 4.2% that we lost. So it's going to be an interesting perspective, and that perspective has, funnily enough, attracted a lot of interest, internationally. Not unsurprising, a lot more investment. People are finally realizing the opportunity of Southeast Asia, but Singapore specifically is seeing a bit of, let's say, asset price increase. Our property market is doing very well, right? I'm told by the EDB there's about 200 new family offices in town. It's seen as an international safe haven now. Whether that's true or not, it remains to be seen. But that allows our business, because when we raised Fund 3 for our venture fund earlier this year, we were very surprised by the number of family offices. Traditionally, we had institutional investors investing in us, but more family officers are choosing to operate. I'm sure that's going to flow over for Southeast Asia and also India and China, because people are now thinking of Asia in a very, very concerted way.
No, you're right. You're seeing, I think you are seeing across different asset classes, the impact of liquidity playing that. And we've seen that across real estate, across commodities, across private equity, across venture. In that backdrop, how are you navigating through it? Maybe in the order of Sandeep, getting your thoughts, how are you navigating? What are you seeing on valuations? How are you navigating that through in India? Gabriel, what you're seeing in China, and then later Hian, back to you for what you're seeing in both Indonesia and Vietnam.
So look, I think that, so we tend to invest at the earlier stage, and I think that's generally helpful because valuations don't change a ton there. And you're playing more for what the potential upside can look like. And I think that what has happened, I'll tell you, from our Fund 2 to Fund 3, which we're currently investing out of, we've actually found the opportunity to go in slightly later. We found that metrics are more proven out. We're seeing that values are not that much higher, so we're able to get the ownership that we want, and the risk is a lot lower. So there's a lot of good that's come out from general customer adoption. And I think that's the key. I mean, valuations are going to move up and down by random issues. And quite honestly, I don't know that I can manage or predict for that as effectively as we'd like to. But what we can try to assess effectively is whether or not the companies are actually delivering core value or not. And what I would say that today, the consumer in India, whether it's metro, tier 2, tier 3, tier 4, across the board, is adopting technology-driven solutions. There's an opportunity for direct-to-consumer brands to be built on these platforms. That's being done with economics that are making a lot of sense. And I think that that is going to provide for a much needed organization to the retail experience that tech companies are going to be in a very good position to take advantage of. And so if you buy into those things, I think you can buy into the idea that values are reasonable and decent, even at the sizes that we're looking at today, because the penetration is so low and early. And I think with growing capital coming into the market, that will help fuel some of that. And I think we should see all of that now start to consistently deliver liquidity. I think the problem that India has had for 15 years is that cycle of return has not been there. But I think where we are now is you're going to start seeing consistent liquidity every 6 months, every year, from a series of large companies going public and M&A taking place as well. And I think that is supported by basic customer adoption.
And Gabriel, we at B Capital also invested in China. So we saw a bit about last year where valuations had, and even early part of this year, where valuations had were starting to kind of get quite lofty. Some cool down. Clearly in the public markets, there's been a big cool down. What are you seeing on the private side? for valuation in China and the segment and the sectors you're playing in?
Yeah, so we're in the growth stage. So basically last year in the fourth quarter and this year first quarter, it probably hit a all-time high in terms of valuations, on the public side, and also provided an excellent window for us to actually sell a lot of our shares and provide liquidity to our investors. In fact, in 2021, we're distributing over $1 billion of proceeds to our investors this year. So this marks the all-time record high for us, as a firm. So the valuation window actually allowed us to go ahead and sell some of our assets. But as you know, in the second quarter this year, with all the regulations coming in, and also the markets actually falling precipitously, the private market valuations have continued to come down. Okay, I don't believe it hits bottom yet, but it's continued to fall from the first quarter, and many of the deals that were actually signed or, in terms of term sheets, are actually being renegotiated downwards, and some of them are actually not being funded. And so I think that this adjustment will be very good for investing over the next 6 to 24 months. But certainly the rapid speed at which it changed actually surprised a lot of people. And this was caused mostly by the regulatory side and a little bit on the capital market side, for China. So in terms of valuations, they are coming down, but they're not low enough yet. I think they'll go lower. That's where we're at right now. Yeah,
and I think I'll tee it up for you for Southeast Asia, but at least in Southeast Asia, what we're seeing on the growth side, given the $10 billion year to date of P and VC investments in the region, at least no cooling off right now happening, at least in the more growth and later stage. What are you seeing at the Series A, Series B stage? What are you seeing in your thoughts on valuation in Indonesia, Vietnam, and other markets?
Yeah, so I think we're seeing sort of coming of age of the promise of Southeast Asia. We've been in this business doing Series A, Series B investments for almost a decade now, and we have 3 venture capital funds. We only have our first growth annex fund that's actually live this year. And the reason for that, to give a perspective on the 10 billion, mid-stage this year, we expect to be 1.4 billion as an opportunity, but it will double to 2.5 billion in 2023. And within that space, we think that there's a sweet spot of capabilities, someone who can be both private equity-esque and yet sort of founder-esque. And that's a very unique skill set. So I think that's the first investment gap opportunity we're starting to fill up. But, a lot of people have asked us, how far can this internet economy grow in Southeast Asia? My answer is the tech sector. Temasek's research says we're at 5.7% of the overall GDP. Now, China is already at 30%. We still got a lot to go, especially in health tech, fintech, edutech, because the foundation services have been laid out. The infrastructure, the payments, all the super apps, Grab's going hopefully to SPAC, Gojek, Tokopedia is going to market, Bukalapak is going to market. So we're seeing a much more holistic and a much more diverse investment opportunity layer in Southeast Asia for each and every person to choose to participate depending on their risk appetite.
Yeah, no, I think we've seen, especially in South Asia, right, seen some of that growth, right, from the internet economy. I know when we started investing like $30 billion, that's gone to 100 billion, and I think now 100 billion projected to go to kind of 300 billion in the next 3 to 4 years. With that, Ian, just maybe a follow-up question. If we shift gears a bit from macroeconomics and where we are in a cycle, which is probably one of the most important things to at least think through as an investor, to the opportunity set, what sectors, subsectors are you looking at? Where are you seeing the big opportunities across, again, Vietnam, Indonesia?
Yeah, so we've had great success in Indonesia, not unsurprising. We invested in Gojek, Tokopedia. We were the first institutional investor way before the rest of the famous names like Sequoia and KKR came in. That's because we were hunting in Indonesia in 2014 when Indonesia was not Indonesia, the fashionable place. We do see a significant increase in valuation, so we're very selective in the investments with Indonesia. We tend to do deals with partners that we know already, like Gojek and a few other places. And I keep on telling my team, remember, we have to invest in Philippines and Thailand. The GDP and all the metrics look like Indonesia 3-4 years ago. And the valuation I'm getting, I think in the ability to really make exciting investments on the same sectorial thesis, but at a much earlier stage and therefore earlier valuation, to me represents strong value and will what propel sort of Fund 3 and the growth fund going forward, in addition to hopefully the selective investments we make in Indonesia. So that's how we're playing the market. We've told our investors that as we go on, you'll see a greater weightage to ex-Indonesia, certainly for Openspace as a focus VC fund for Southeast Asia.
Gabriel, moving over to you for China, it's obviously been a strong place for value creation in the last 10 years. Over the next 5 years, especially with common prosperity and some of the new changes in kind of tech landscape, where do you see as the key areas to look for interesting opportunities?
Yeah, I think for us, we're going to focus on the same sectors that we have been focused on over the last 25 years. It hasn't really changed, in terms of TMT, medical, and also consumer. I think I don't think that the government is intending to go ahead and reduce the profitability of companies, right? That's not the goal of the government in terms of the regulations. They're just trying to enhance and ensure the delivery of the services and their products are safe for consumers and safe for children, right? And appropriate, right, for the development of the country. So many of these regulations, I think, actually will be the same around the world over time. I think some countries are a little bit ahead, like in Europe, you have GDPR, in China, the regulations that were put in recently were also just, similar to GDPR. And so I think that the opportunities for investing going in the next 5 to 10 years shouldn't be that much different, given that there's lots of innovation that are being done in China, and that will never stop because there's so many entrepreneurs in China. And so it's focused on a particular situation, a company, and an entrepreneur that we're backing and investing with. So I don't think that thesis has really changed very much. So the industries that we're focused on investing in are the same as what we have been doing. Thank you.
Sandeep, on India, I know for the last several years, always a big question, exits. Starting to see some of that happen with, whether it's like a Zomato IPO and a few others slated for the next 6 to 12 months, starting to see some M&A. What's your view on both some of the exit landscape in India and then where you're looking for over the next 12 to 18 months as areas to make more investments?
Yeah, so look, I started investing in 2005, and I think there have been 3 times over the past 15 years that we've talked to people and said, this time it's different. And so I'm kind of guilty of saying it a lot, and so I think this time is different again. And yet I honestly do believe that this time the scale that the companies have achieved, the unit economics that are existing are going to showcase that that they can raise capital. And actually, I'll tell you the other thing that's really different now. The entrepreneurs that are going public and the capital that they're raising are with the mindset to actually participate in acquisitions. So they're not risk averse. They're looking at high growth. InfoEdge built a fantastic business in Naukri.com. They were the first company in the internet space to go public, but they ran a business that was based on growing at a certain manner and doing a certain sort of thing. They did extremely well investing. They were early investors in Zomato and Policy Bazaar, and they've done that, but they didn't acquire. They were not an acquirer of large businesses. If I look at what Zomato's plans, Swiggy's plans, all these guys, the stories that they're telling and the business that they need to build will only happen via acquisition. And I think they know that. And you're also seeing that with the traditional houses, whether it's Reliance or Tata. And they started by buying things at discounts in situations of desperation. To today, they're now having conversations where they appreciate that they have a role to play in building the new India. They want to be recognized for it. They want to participate in it. And I think that they will aggressively invest behind that. Now, from our standpoint, I'd say that in Fund 3, again, it may come with age, it may come with having lived here now, having kids here. We decided to add dimensions to the fund that focused on social and environmental awareness. We wanted companies that are not necessarily ESG compliant from ticking a box perspective, but really more from delivering things in a way that we felt was going to be beneficial to 1 billion people coming into the consumption world that doesn't have a negative impact on the world around us. So we're not an impact fund, we're not a green fund, but I think it's important to marry these ideas. And actually, it's quite interesting if you look today at what you see in the West. Allbirds and Warby Parker are going public. If you look at Allbirds' S1, they talk about a sustainable public offering. They dedicate some 50 pages of their S1 to talking about the impact of sustainability and what that's meaning. And there's a question, and I don't know the answer to whether that commands a premium on valuation, but I think that there's an opportunity to clearly differentiate with that mindset. So I think that will be some of what we look to integrate within the companies that we invest in going forward. We'll continue to look at consumption and consumer as the main driver of areas to invest, with technology enabling that. But I do believe that social responsibility and environmental awareness are elements to it that I think can make a difference, both in terms of the premium that you can command as a brand or differentiation that you can deliver as a brand, and potentially going forward the metrics that creates for the business and therefore the valuation.
Yeah, no, I think it is an interesting time in the market. I've been investing there for about 15 years. So it's interesting to see what's kind of happening the last 12, 18 months. Maybe shifting gears a bit, and again, covering that same point with all of you, is the market's really getting much more intense, much more competitive, especially with more capital is chasing really strong founders, strong teams, strong companies. And so in that context, differentiation, how do you create a bit of an edge for founders, becomes extremely important. Again, Sandeep, maybe starting with you, and then Gabriel, how are you differentiating yourself? How are you helping win deals in competitive situations?
Look, our model is. Sorry. Okay. So look, our model is intrinsically different. I would say we invest in only 8 companies per fund cycle. We go in relatively early. So for us, I would say we're going to maintain that position of, once we start working with the company, it's sort of our bet in that space. So whether it's with Rebel Foods in the food space, or what we've done with Dunzo in the hyper local delivery or the quick commerce space, these are decisions we made in the direction of a certain company, and that becomes sort of the end all be all for us. Thankfully, the markets are broad enough that we can make concentrated bets like that and yet be in enough new areas, and I think find enough opportunities to do so. But again, I guess the only thing that will really differentiate is showing entrepreneurs that you can build successful businesses and work with other entrepreneurs who've done it. So for us, the real differentiation will be in the fact that we should hopefully see companies go public in the next 12 months. That will be a metric of success for what we're able to deliver, both for our LPs as well as for our entrepreneurs. And I think that will continue to attract the right type of entrepreneurs going forward.
Gabriel?
Yeah, so what we do is we have a operating team of 7 people. So they go ahead and help the companies to build their businesses. That's actually a very important part of differentiation, and also our network and contacts with the 50 plus companies that are listed already in our portfolio. So this is something that we have to do in order to persuade the founder to go with us. There's lots of competition in China. And so having some value added and specific value added that is communicated to the CEO is very important in the first meeting with them. So this is how we go ahead and try to differentiate ourselves.
And Hian, getting your thoughts on Openspace and how you've been able to kind of navigate that differentiation and creating a bit of the competitive edge for yourself in the region.
Yeah, so for us, we've been doing this for almost a decade, but we realize now that the firm mantra is active intelligence, not necessarily just backing founders, but having the team to actually go find the information, asymmetry for the firm and also for our entrepreneurs. So active intelligence is now what we call ourselves. How do we do this? We've got one of the largest, maybe perhaps the largest team that's solely focused on Southeast Asia, not India, Southeast Asia, just Southeast Asia, 35 people in 5 countries. We have people in every single country with native language, and the entrepreneurs know that, right? So what we've then parlayed that is, of course, a very concentrated portfolio. To give a perspective, we've got about 37 companies. In that, we've got one decacorn, Gojek, which has been there from seed, 30 over billion. We've got one unicorn, Credivo. We've got two more undisclosed, which I think in the next 12 months will then also become billion-dollar companies. So that's a 10% hit rate, and the entrepreneurs know that. And so for us, that translates to an ability to convince entrepreneurs that if you take money from us, we will introduce you to B Capital, KKR, because we've done that. We've raised almost about $6.5 billion just for our portfolio companies alone. And they know that our investors are happy. We've returned capital for Fund 1. I'm at 1.2 DPI. I'm charging a fee nowadays. And our Fund 1 and Fund 2s are in sort of roughly in the 30s. And so we're foundation stone. And then you add on the growth fund, people know that we can go from bean to bar. We can get you all the way from Series A all the way to pre-IPO. And we're here for the long term. And I think that's very convincing for some of the founders once you add the active intelligence and the track record of the firm. So hopefully people believe us.
And I know we've got less than 5 minutes remaining. Why don't we move to some of the questions I see getting popped up from the audience? I think the first one is, the question is from the audience is, I'm wondering why valuation as a topic is getting so much time and attention, especially given global liquidity situation, public market prices, and software digitization. Maybe I'll share some thoughts and then open it up to any of you that want to kind of jump in. At some level, you're right. I think we are seeing valuations for across asset classes being at all-time highs. At least it was for a large part of last year and till about 2-3 months back. And tech as a sector, look at the data, even the public market side is the second best performing sector across different industries. So I think that the valuations are high in tech. They've been high across different asset classes. At least I've seen it's important as investors to navigate through the cycles. So I think that becomes important, knowing where you are in a cycle. But also a lot of our job becomes in picking the micro. How do you still pick the great founders, the great teams, and just kind of adjust your style in that context. So maybe with that, Hian, over to you. If there are any thoughts on this whole thing on why is valuation the topic getting so much time and attention? Question from the audience.
I'll go first. I certainly think that the increase in valuation from a ratings perspective and how much you pay for traction in Southeast Asia is something that I welcome, simply because I see the market getting bigger. I see the entrepreneurs getting more experience. I see the aggression level being there. What I worry is people just piling in, right? So not to name names, but what we are seeing right now is a lot of people being very interested in Southeast Asia. A lot of US names like Hello Sophia, Ribbit Capital, Goodwater, putting money into these companies very quickly. And I don't think that's wrong. I think there's a different style of investing. And it's certainly something that, it's more momentum driven. So I think it becomes a very lively debate as to whether you're correct or not. For us, we are very selective. And so we generally do a lot more due diligence. We don't move that quickly. That's our style. But I think it makes for a wonderful debate.
Gabriel, your thoughts on this topic of valuation, why it's getting so much time and attention?
Because it's very high. And we should be selling.
No, I think that's absolutely true. I think there's across asset classes, it is an all-time high. Just so important to kind of know where we are in a cycle and just navigating through that. Why to move to another question again from the audience was a regulatory move in China. We have 1 minute remaining, and so maybe we'll try to wrap up. Why don't we shift gear, maybe wrap up with parting thoughts from each one of you. We've spoken a bit about macroeconomic cycles. We spoke about opportunity set. We spoke about differentiation. Maybe 30 seconds, Gabriel, parting thoughts from you, how you think about the next 6 to 12 months, Hian and Sandeep, then from you.
Yeah, I think the next 6 to 12 months, the valuations will come down, and I think that there'll be good investment opportunities, at least for China. Thank you.
Hian, 30 seconds.
Yeah, I just think the age-old saying that it's very hard to tell whether you're lucky or whether you're good still applies. In a rising market, it's hard to see. So I think we're just going to stick to our knitting, seek some depth in the investments, and hopefully ride through the cycles.
And Sandeep, to help us wrap up, your parting thoughts.
Yeah, I think the party is starting in India. It's a good time. So I think we'll see some of those profits come out, and I think we're going to start to see some good new investments to invest in. So it's finally coming together here.
Excellent. So I think that wraps up our session. Terrific panel that talked about the balancing act, opportunity sets, some of the things to watch out for, and some of the macroeconomic areas to kind of be thoughtful about. Thank you.
Great. Thank you.
Hi, everyone.
Thank you all, everyone, very much for this insightful session.